You're listening to AI Prism from Seoul Economic Daily.
It's Monday, June 1st. Here's what today's story could mean for the Korean market. Korea's household debt-to-GDP ratio is on track to hit the government's 80% target 4 years early, but not because Koreans are paying down debt. It's because the denominator is surging. Samsung Electronics and SK Hynix are printing so much semiconductor revenue that nominal GDP growth could hit 12.6% this year. That inflates the ratio in a way that masks real financial stress. The Bank of Korea has already signaled rate hikes for the second half. Fixed mortgage rates at major banks are running between 4.26% and 6.95% right now, and the market thinks the ceiling could hit 8%. Here's what that means for equities. It's Monday, June 1st. Here's what today's story could mean for the Korean market. Korea's ETF market just crossed 500 trillion won, roughly 357 billion US dollars for the first time. Over 40% of new ETFs launched this year are semiconductor related. That concentration is a double-edged signal. The KOSPI climbed 28.45% in May alone. No sell in May. Instead, Samsung Electronics and SK Hynix now account for a combined weight in the top 10 KOSPI names that just exceeded 60%, a level not seen since June 2000. Foreign investors sold 44.7 trillion won, about 31.9 billion US dollars worth of Korean equities in May alone. Year-to-date net selling has crossed 100 trillion won. That's roughly 71 billion US dollars in outflows from a market that's still hitting all-time highs. The divergence between price action and foreign flows is the defining tension heading into June. So what's actually happening? The semiconductor supercycle is real. Q1 global DRAM revenue hit 97 billion US dollars, up 80% quarter over quarter, a record. Samsung Electronics holds 38% market share, up 2 points from Q4. SK Hynix sits at 29%, but consensus estimates show the quarter-on-quarter earnings growth rate for Samsung slowing from 49% in Q2 to just 6.7% in Q4. SK Hynix follows the same trajectory. Peak earnings growth, not peak earnings, but the distinction matters for valuation. Then there's the macro overlay. At a Hana Financial Investment Forum last week, analysts from Hana Securities called KOSPI 10,000 a waypoint, not a destination. AFW Partners chief strategist echoed that, but flagged June as a volatility window. June 11th is the Korean market's quadruple witching day. June 18th is FOMC, and second quarter earnings from chip companies, the real catalyst, don't land until July. What should you actually watch? First, foreign passive fund rebalancing pressure. When KOSPI heavyweights breach internal weight limits, ETFs are forced to sell mechanically. That's been the source of the 100 trillion won outflow, not a fundamental exit. Second, June CPI data due June 2nd. April CPI came in at 2.6% year over year. The market expects May to breach 3%. If it does, the BOK hike timeline compresses. Third, semiconductor earnings guidance in July. If SK Hynix or Samsung signals any demand softening for H2, even at the margin, the rotation trade into secondary names like defense, shipbuilding, and secondary batteries becomes the story. Carbon emissions permit ETFs are up 12% in the past month as energy prices spike. That's a different signal. It says the market is pricing in sustained energy cost pressure, which feeds into input costs across industrials and food companies. CJ Cheiljedang's Q2 operating profit consensus has already been cut 21% year over year. That's today's AI Prism Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.